Thanks for checking out this week's FinPrep Trading and Investment video newsletter. So ever so slight sell-off here in SPY, kind of pulling off against that 222 target, looking at potential support here off the 420 highs. We had the trend line right drawn off, kind of capping that rally in June and providing support to this bounce here, kind of confirming the breakout in August. So potential support here at about 218 off this trend line, off again extending back off the 420 highs. You have your rising 20-day moving average coming up underneath as potential support. Should that area fail, then 216 is the next area of question, where you have your 50-day moving average as well as flipping to the weekly chart, your 20-week moving average there in magenta. Somewhat hard to see. Completely still oversold on a weekly basis, so again, further downside may be ahead, and a potential negative MACD crossover. That's a little bit more pronounced here on the Russell chart, so we'll go ahead and take a look at that. Russell did get its sell-off later in the week, however. So right off that trend line did actually cap nice resistance against the small caps here, so we'll see what happens. Oversold on ultra fast stochastic, although not so much on the fast. Same story with SPY, and then again more pronounced with the potential bearish crossover on MACD. A little bit easier to see here on Russell, and that makes sense given its the extent to which it moved relative to SPY. So looking at Treasuries, Treasuries did lose that 120 level again, which was your longer term weekly moving average, 200, 250, so significant level to have lost currently. And this diffuse pattern of lower lows in a more exaggerated fashion than kind of your highs kind of suggests that a potential period of basing may take place over a prolonged period of time. And again, looking for 116 as a very significant level for Treasuries, as it's basically your long-term price channel support. So want to see what happens there with Treasuries in the long run. Dollar index did actually end up kind of still continuing a bit of a sell-off against that secondary peak, right, extending back to 2015 in that general zone of 26.25. So question here is this simply just, again, a little bit of profit taking off that massive move off 25 there? And then if that's the case, how far do we go below? We got your rising 20-day moving average here at around 25, let's call it 75, and then your prior highs around 25.60. So looking at this as potentially a setup just selling off, giving off that massive run, and in advance of a potential breakout to new highs, which would take out the 25.60. But arguably going to be pretty linked to what Fed Reserve does with regard to the discount rate here in December. So, but clearly massive move out of the dollar, and we'll see what's happening next. So gold did actually find some support currently off of, I think the low of day, yeah, it was about 110, 110.60. So along that long-term trend line again, on our weekly chart, marking many of your failed bear market rallies, just connecting the peaks there and extending back, and did provide pretty decent support actually to prior bounces. So we'll see what happens here with gold. But if there is further downside ahead, we'll take a look at GDXJ. So GDXJ is pretty nicely set up here, consolidating sideways for multiple weeks, and then you have your 20 DMA daily moving average bearing down upon price. Price barely kind of just jumping around hopscotch around this 250-day moving average, and even on the weekly, kind of just below your 50-week moving average, and just kind of, again, jumping around that 200-week moving average. So question here on GDXJ is, are we being set up here for end-of-year sell-off? So we'll take a quick peek here at seasonality. So seasonality extending, these are monthly bars extending from 2011 to 2016, the approximate period of your bear market. You'll notice basically your last 2 months of the year, November, December, the negative percentage price change, 3%, 2%, etc., which really kind of sets you up then for your beginning of year rally. And it's really easier to see. This is just average data, so when we break it down to percentage price change by year, which is what you're looking at here, years coinciding with the various colors, again, your past 2 months, November, December, and these two shaded areas here tend to be quite negative with regard to price, with the exception here being 2014, but for the most part, downside. So, and again, that kind of is interesting in that it sets up a beginning of year rally. For the most part, you could see, with the exception here of 2015, which was a very sharp, it terminated there in mid-January. And then the primary exception being 2013. But for the most part, your first 2 months of the year in GLD, even in this bear market, have been your period of strength. So, and then coinciding again with your past 2 months of weakness. So that's just bearing that in mind for gold with regard to its current setup. Are we set up for further lows? If so, is GDXJ a short candidate potentially? Obviously we'll see how price unfolds and make decisions from there. Copper. So copper is sustaining its bit of, again, sideways consolidation atop the 9 EMA. I guess somewhat similar in perspective to this. So we'll see. Question here is, even if we lose a 9 EMA, you have your 20 DMA rising up below, and then this long-term trend line, which basically captures your bear market right off your two peaks extending back to 2011. So is this a true legitimate breakout? If so, obviously we would look for this piece to hold even if we continue sideways or down a bit more. Really wouldn't want to see a substantial takeout of this long-term trend line in order to validate the perspective of copper being in a long-term now bull market. Very interesting piece here, probably most interesting chart for the week then that we'll be reviewing is Munis. So here's Munis on the weekly, Municipal Bonds that is, and price at very long-term support, very important trend line here as can be seen, right? So 2008 low into your 2011 low in January, marking your bounce for this, right? And then 2013 taper tantrum, and then found some support here in late summer and through a rally. And here we are, just massive sell-off as you can see. So interesting thing about Munis is that it led the bounce from our perspective. So you lost your substantial medium-term trend line here back in very beginning of September of this year, which was actually in advance of your other bond types. So if we take a look very quickly, Treasuries were the closest ones to follow. So 1 week subsequent to that losing of that primary trend line. In Munis, we did lose it then in Treasuries, and then the subsequent fall through on other, bear with me, bond measures. So this is the AG, the Barclays AG, which captures about 40% Treasuries and a substantial portion of municipals and corporates and so forth. So this really kind of losing its primary trend or medium-term trend line, 1 month subsequent to the sell-off in Munis, and junk bonds. It was on somewhat of a 2-month lag, losing that price channel that we've been looking at in prior weeks' videos. So very interesting to keep an eye here on Munis. So if the Munis did lead the sell-off, will they lead the basing or the rally? Did essentially touch the trend line here on Wednesday, and we'll see if this continues to hold and pairs through and takes on some form to further upside. So Munis, definitely looking at that for potential signs of life within bonds. Finally, the British pound. The British pound did break above that 50-day moving average. Question here, though, is, we have this extended down move, sideways consolidation, sell-off, sideways consolidation, sell-off. And here we are, diagonal consolidation up. So, essentially bear flag, arguably, particularly on a weekly chart, a bit easier to see. So, yeah, 20-week moving average bearing down upon price and then overbought on your ultra-fast stochastic and fast stochastic. So, the bounce in British pound, is it done? If so, looking for potential resistance around this trend line here. So a lot of action this week, pretty good stuff. Interesting, probably looking for, again, signs of life here within the municipal bonds, and particularly with any follow through on TLT as it's nearing that long-term price channel support. Very vicious sell-off in bonds. And so the question is, when is enough? And then the tables begin to turn. All right, guys, thanks for checking us out. Hope this helps you guys. Take care.